Welcome to Trading Lounge and the SP 500 for the 31st of March. Starting on the weekly chart here, we're looking at our expanded flat correction of wave 3 here, an A wave here, 3 in up here for the B wave, and 5 waves down here for the C wave of 4 here. And if that's the case, then we'll see this market just continue higher from this particular point here. Because we have 5 waves in this section here, we need to be careful that we don't have some sort of weird top in place here, which has only got 3 waves, so I don't see how that's possible. But hey, you know, we could have blue wave 5 already in here. But so if that's the case and we've got 5 waves here, then we're going to rally back up to meet supply. So that will come in at here at 61.8%, so we can just put our 50-60% here. It will want to try to get to that large number. That's what markets like to do, finishing lines, all that sort of stuff. I mean, the other count that we've got is that we just continue sideways here in more of a corrective pattern here, but once again that would just take us up in an A wave, which we already have. We've got the B wave in place and we're going up for the C wave here for the wave D. So if it's going to give us any trouble, it's going to be here. I won't be able to I really won't be able to tell the difference between this bullish market and this sideways market until the 3-wave move is completed to this particular point here, and I'll need to see more after that as well. So it's just a time thing. But you know, remember when this happened here, then you know it was the same thing. Everybody was bearish as hell here, and you know, we had our 3-wave count to this particular point, and I'm not saying I'm saying it was a possibility that the market could move up from this point, and it did. And our idea and our game was to wait until we got support on top of the 2,500. And then I've also mentioned that over here as well. So we'll watch the first wave move up. If it's in 5 waves, well, then we'll start to look and buy positions on the support of the medium level here, the 2,500. So that's what we've done, and that's what we're doing. So the Elliott wave is one thing, and that just helps with the directions, but the trade setups I consider more important than the Elliott situation. So we take the trade, we just take the signals and we manage the spondoolies, you know, it's as simple as that. So that's what we're doing. So let's go in and have a look at this here anyway. But just to let you know that I don't have any real answers of this moving all the way up through here, or moving sideways through here. I can only just work with the internal structures of 3 waves and 5 waves as we see them and act on them at certain times. So that's what I've been doing. So go to the 4-hour chart here. So the move up through here, we've been looking at it from this low here. We've been looking up at it as wave A and wave B and wave C, but it can be wave 1 and wave 2, as I always mentioned. And the main thing here, the takeaway here, this particular chart here while we're here, is that you know, when we look at this across here, just the market, it's just really simple, you know. I mean, 2,500, so we've just been waiting for it to become support. So you know, when it moved up here, that's not support, so we wait for the first high above the level, and then we wait for the move down. But once we got that first high above the level, that becomes the signal here, the trigger in. But we can take the next high here, and we can also take these highs here as well. So I won't bring the picture up of the classic trading levels pattern because we've seen it so many times, but new people are coming on board all the time, so I need to bring it up, but I won't bring it up today because we talked about it yesterday and everybody should have seen that. So So what we're obviously looking at here now is that we have this trend line through the top here. So there's going to be problems here at this trend line. There's going to be problems here at this old high here. So we can expect the market to pull back and dance around this space here. So the 2,500 is a medium level. And then the next important levels up is the 2,650 and the 272 and the 280 here. So 65, 72 and 80, they all become group 2. In this case, it's minor group 2. And what I'm looking for here, if we can get support in this level here, and that's the same as this here, like it'd be a smaller version of this. So shooting up here, this to here, to here, to here, that's not support. It's only support when it comes back down and then starts to take out any previous highs, high, 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 and hello, and we go long here. So we need this pattern here in a smaller version to sit on the 2650 here. Then it's entered group 2 at that stage. Otherwise, it's going to be rejected from here and it can still fail from this point here. So yeah, it's just step by step. So moving into the hourly chart here. The other point here that I want to make here is that we've got our A, B, and C here. Now, it was a little bit short, so it's possible that all of this is just the A wave here, and then the B wave over here as an A wave, a B wave, and a C wave finishing just here. So it could just drop from here. I'm expecting it to drop from here anyway in terms of a wave 3 here, and then a wave 4 here, and wave 5 coming up. So 1 and 2 here, 3 here, 4 here, 5 here, then an A and a B and a C wave here, and then we move up again from that point. That's what we'll have a closer look at that. But as it stands at the moment, an A and a B and a C here. So it's possible to have 5 waves come down into this space here. So we are long, you know, we talked about being long above this one, long above this one. We talked about the first high here, this long being long here, same thing here as well. So we need to know where to put the stop really for this. So what we can do here. Also, just while we're here, let's just also do this. So from this low here, we're very close to a top here for the third wave anyway up here. So this is the 38.2% retracement level here. So that comes in at 2584. So we need to always gravitate to the closest largest number. So we could go to 85, but we're much safer going to 80. So if you're going to put a stop in at that point, then it'd have to be under the 8. Don't put stops on whole numbers. So stops need to go under that. So you wouldn't at 80. You wouldn't put it at one point under either. So if you kind of think of the numbers, just while we're here for stops, if you think of the numbers from 1 to 10. So 1 is the strongest number, 5 is the next strongest number. So when you're thinking of numbers from 1 to 10, and you've got 5 in the middle, so you've always got the choice of putting the stop above the 5 or below the 5. And it's not a good idea to put it 1 point below something. So if it was at 90 or 80, for example, we're talking about 80, you wouldn't put the stop at 79 because you'll get clipped there. So 79, and then you go down to 8, and 8 is really an important number. So you want to be under the 8 as well. So 8 is the support. So 78 is the support, the next real support down from 80. So then you'd either got to put the stop at 7 or 6, ending in 6. So I always get better results with stops at 6 rather than 7, and that's obvious. But if I'm going to put a stop below the 6, then I've got to use the number 5. So under 5. So I won't put it at 4, and I won't put it at 3, and also I'll have to put it at 2. So most of my stops when I'm trading will end in either 6 or 2, the last numbers. Very subtle but important. So let's just continue to drill in here for a moment under the 15-minute chart here. So let's just get a few of these here. Copy this. So, I mean, like I mentioned, we could look at this as an A and a B and a C wave to here. That's really quite viable, and we can expect the market to move down. But just for the sake of the exercise, we don't need that C there anymore. We can push that up to here, push that up to here, and we'll just leave that because it can be wave 2 here as well. So we can copy this here. That would give us wave 2 here, wave 3 here, just on the top here somewhere, and we'll see this wave 4 down. So we know that there's a trend line coming through right on where it is here now. We know we've got this old top here. We know we've got the beginning of group 2 here. So to me, these numbers, 2,600 is important, 2,700 is important, and we'll get tops and turns on those numbers. But and you take them on board, but these numbers here, 65, 72 and 80, are more important. And yeah, there's a lot of other numbers in between here as well, but we don't really need to get into that unless we're in a tick chart or 5-minute chart. But so this is where we are at the moment. So we can look at, copy this one here. We're looking for wave 5 here. So this will be kind of first high above that level there. So we can just move that in there. I can see most of this structure here. I can figure most of it out, but here's just I need to really spend a little bit of time in here with this. But we'll consider this wave 1 here, wave 2 here. Had the nice 61.8% retracement level in 3 waves here, and we'll look at. I mean, even as a B wave, if I put the B wave here, that's already traded too high above the 61.8%. So if I take that to here, 61.8% is down here. So we're way above the 61.8%. So it's likely not to be a B wave, but I think it's just important that I point things out, you know, as we go. So if we take from this low here and we look at this, let's just assume for a moment, well, yeah, we'll just assume that there's a top here for this. There's probably a bit more upside, but that's the 38.2% retracement level here. So at minimum, you'd need to leave your stop there. So we gravitate to 80 here. So we need to come down to 76 at that point for any stops here. I'm not going to put it in, and the reason I'm not going to put it in, but that's where you would put it in, but that will only get you to if there's a wave 4 to come here, then that's only going to get you up into this level here, the 2650 level, and then we're going to see an A wave, a B wave, and a C wave coming back here. So what we can do in this case, I'll just clear this up again here, we'll just grab this low here. Normally I'll just take it to this high here, but I'm just going to take it to I'm just going to take it to the 2650 here for the moment. But that would leave the 61.8% retracement level back down at this space here. So it may not pull back this far. I mean, this wave 2 didn't pull back this far either. So we'll just borrow these here for a moment, because this is what we'll be looking at here, some sort of ABC correction here in this space. So what this does here, this also allows us to build in on this second high here, and also the top here as well. Right, so you only know the top's in place because it's dropped way back down. Okay, so kind of pointless in putting it there, but the B wave is important because any move up beyond that confirms that we're going higher at that point. And down here, you can move in there as well, and that's also a bit of a finesse as well, because because what will happen if the market comes up, it hits it, drops back, comes up, sits back on it, and then moves up again. So it's good to understand that the same way it moves across the levels as it does, you know. So that's sort of where we are at this stage. And we want this, you could take some small percentage profit at this point here with the view of getting back in. I mean, you'd only take percentage profit here if you're going to get back in over here for this. So I'll just turn this green here. So that means that we're getting in at that position there as well. It only has to be small. You don't have to overdo it. And but this B wave here, once this moves down in 3 waves here, it's like this B wave here confirms that this is corrective here. But we knew that was corrective here because of all of this pattern here. But generally speaking, that's the one there. So yeah, I'll just leave it at that. I'll just have a quick look at the Nasdaq. So same thing. We talked about this yesterday about the market not coming down to this level here and just coming back up, just coming down to this level. Even that was short here. This has also got the qualities here as well. So what we need for this to be bullish here, we can see this can be an A and a B and a C and finishing here and just drop straight down from here because it hasn't pulled back to its 61.8%. It has traded rather high here for that. But what we're looking for here, once again, is we're just looking for a little, I'll dramatize it a bit, a little wave 4 here, then a wave 5 here, then this will be the reaction here. So after the reaction here, then we'll push up here higher from that point. So the good news here though is if we get 5 waves here, that means we're going to be continuing higher at that point there. So one step at a time, I guess. So I'm just looking at the structure of how other things can be counted. On the S&P, if I just come to the 2-hour chart, I was just looking at another way it could be counted. It's probably not correct, but I'm just looking at it here because, on the Nasdaq we could count this as wave 1 up here and back for wave 2 here. But on the S&P here, I couldn't really get the 5-wave structure down here for this. So it's possible that this is it here. And if that's the case, this could also be counted like this as wave 1 here and 2 here and 1 here and 2 here and moving up from that point. I don't know if that's the case or not. I'll just throw it on the table and we can get rid of it a little bit later, but it just sort of popped up, so I'll look at it. It's probably not right, but if it is right, then we'll see this start to pick up pace through here. Normally in the bullish weekly cycle, we would see Wednesday and Thursday be the days that take your stops out. So we need to be mindful of Wednesdays and Thursdays. The market tends to run Friday and Monday and follow on from Tuesday. All right, I'll leave it at that. Thanks for tuning in.